maybe that'll spur some export sales. I sure hope so, but we need to get some beans on the books, especially for new crop.
Hi, everybody. Welcome back to the Commstock channel. I'm Marlin Bohling with you. So glad to have you with us once again. As always, I want to remind you to like these videos and subscribe to them by clicking on that bell icon down below and share these videos with everybody you know that can use this information. Well, today, my special guest is Justin McKinney of Commstock Investments. All right, Justin, as we're coming to the end of the week here, I guess I want to look forward to a big slew of USDA data that's going to be coming out at the end of the month. Already, it seems to be garnering a lot of the talk around the trade. What I'm talking about, of course, is going to be the quarterly stocks report and also the planted acreage report. They'll both come out on June 28th as we wrap up the month. And you and I were talking before we started this recording. That also happens to be first notice day, correct?
It does. And, you look at all these trade estimates coming out into the market next week about where we're going to end up on planted corn acres with the PP in the western Minnesota, northwest Iowa regions, and the South Dakota. I have a fair amount of clients that ended up having to PP some acres. Not what they wanted to do, but what they ultimately had to do. So, the trade estimates coming out this coming week will kind of tip the scales which side of 90 million acres, that prospective plantings that we were looking at. Everybody most people in the market felt like that 90 and a half million acres is going to be a little bit shy. Maybe we come in closer to that than what we would have at the beginning of the year.
All right. So now that we've had all the acreage that had to battle wet conditions, and they, in some cases, I think even had prevent plant, you can address that maybe. But the question is, did we get anywhere close to the acres that USDA initially thought we would have? And even in the ones that we did get planted, the question is, are they going to amount to much on quite a few of those acres?
Well, ultimately, the market probably was trading something larger than what we had in March for the prospective plantings report, in that 91 and a half to 92 million acres. It doesn't feel like we're going to end up there. We're probably somewhere in that 90 million acres. Anything under that, I would guess, would be definitely friendly to the corn market, depending on what the stocks number comes in at, but definitely friendly to the corn market, sub 90. You look at the bean side of the equation, did those acres go to beans? There's no doubt some of them did, and as always they do if they didn't have fertilizer, and they could go to beans. But where we come in on that bean number, ultimately the overhang on this bean market has been the lack of Chinese buying in the new crop. And we just have those stocks hanging over our head. And until we see something change in that, it could be tough to move the needle on beans much.
Well, now that we're getting toward the end of the month here, in my mind, traditionally, this is usually one of those times of the year where you see the market do a top. It could be anywhere from the 1st of June to maybe sometime in mid to late July, but we're right in the middle of that prime period right there. Key volatility. Now, some have been saying that maybe we already got it out of our system here over the last 2 or 3 weeks. Since the 1st of June, we just fell out of bed in the grains. Do you think we have an early top in the market this year?
Well, Marlin, I appreciate you putting me on the spot for that question. We look at the funds here, relatively large amounts short, a couple 100,000 short. At the time of recording this, we do not have the commitment of trader data. Now, the commitment of trader data will be one more day accurate, as that's released on Friday as of Tuesday. So we're not trading on Wednesday. So therefore, we'll probably have a little bit better handle on where the funds are at. Historically, we have seen markets rally a little bit later than normal in presidential election years. Obviously, that's what this is. But, we look at this corn market. There has been some decent things to talk about in the corn market. We've seen really good exports. Ethanol demand has been okay, things like that. So I'm not ready to call maybe a top yet, but I'm trying to temper my expectations. And I'm sure that we're going to meet some sales targets on the way up here if we do get those funds to cover. But at this point, yeah, we mudded that crop in a lot of spots. We saw the Illinois crop rating down 9% last week. Minnesota's probably not far behind being cut. Where I'm sitting at, it's a swamp. It rains pretty much every day here. I think last week we got 4 inches of rain over the weekend. So, what isn't underwater, what did get planted, what doesn't have a wet spot looks pretty good, but we do have some yellowing of the corn. I would be really surprised if I didn't see Minnesota crop conditions at least start working lower going into next week's crop progress report.
We did talk earlier this week about the fact that, thank goodness, Mexico is buying a lot of corn. That's really helping to prop up that market. Soybeans, usually China's the big buyer in there, and they're just not there this year.
There's a couple schools of thought on that. Brazil's crop potentially could be closer to the USDA than CONAB's number. I know many in the trade were hoping for that, CONAB to be right, but we still haven't. We've seen some flash sales in the soybeans, which is definitely positive, but just not the volume, and especially none in the new crop from China. So looking forward, the flip side is we've talked about this so much that what incentive is there for them to go load the boat and add a bunch of new crop sales on at this point in time? We just don't have a storyline for them to get too excited to buy this market. Now you look at the prices. We're not that far off of the lows. Maybe that'll spur some export sales. I sure hope so. But we need to get some beans on the books, especially for new crop.
Well, I would be remiss if I left out the wheat. Here we are at the end of this week. From what I've heard, the harvest had already moved up into Nebraska. But we had a lot of heavy rainstorms, heard of some bad hailstorms that kind of wiped out a bunch. The old white gleaner, as they say, went through. But on the whole, it sounds like the harvest has been pretty good, Justin. The yields have been better than expected. Test weights until the rain were pretty good. That may take a pound or two off of that, maybe. But as we get up into Nebraska, does that mean the harvest pressure will now start subsiding a little bit in the market? Because they've taken a big bite out of that since 1st of May.
Yeah, that's been pretty close to a headshot mallard on the charts. But you would sure think that we would get some sort of stop on that bleeding. But until you get a storyline there, not only do we have better yields coming out of the KC wheat, and we are moving that harvest along. Inevitably, when you have good wheat, you have a good hailstorm, right? It seems like it anyway. But and then we had the Illinois wheat tour come out, saying over 100 bushel an acre on the SRW wheat in Illinois. We still don't have a storyline on that SRW wheat, that Chicago wheat. So it's probably a wait and see. We put a pretty good premium in the market when Russia had their freeze, dry in Ukraine, enough to at least spook the funds a little bit, and we saw what it can do. So if those yields actually do come out this fall, in the Russia and the Ukraine area, maybe we will see a spike or at least some sort of rebound in that wheat, which definitely would be supported on the corn market.
I stand corrected. It wasn't the 1st of May when it turned. It was like about the 3rd week in May. But anyway, nonetheless, it dropped like a rock after that.
It died.
Yeah. I did hear some stories about Ukraine thinks they'll have a bigger crop than what they had last year. Now, I would put that against the fact that if you recall last year, Russia came in there and just took a bunch of wheat and said, mine. And could that happen again? And it just disappeared.
Ultimately, the only way we're ever really going to know is what the FOB values are, what they're selling wheat for over there. The Matif contract in France definitely gives us an indication, but ultimately we're going to need to watch those FOB values. They had crept up a fair amount. I've heard that they've set back some. So looking forward here, unless we see those FOB values spike up in Russia, in the Ukraine, I would certainly think that maybe we bought the rumor and now we're selling the fact on that wheat market.
Okay, on the flip side, I know you follow the livestock trade a lot. What a big gyration there. Cattle market, they've been flying relatively high here again lately. And the hogs, do you look at that as maybe a dead cat bounce? Do you look at maybe it establishing a base here now?
Well, I would sure like to believe that, again, when we get the commitment of traders, hopefully the funds are somewhere near the even position on those hogs. I would sure like to believe that we're going to move that market higher. But ultimately, up until this week, our kills were running above last year. This week, they're slightly behind. But in general, we seem to be having plenty of hogs. And there again, you can talk exports and look at Mexico. If it wasn't for Mexico bailing the hog market out, where would we even be at now? Last year, we had a huge equity burn in the hog market. Everybody was looking for contraction. The Hogs and Pigs report didn't give us, enough to even really move this market significantly higher. Barely an opportunity to hedge profitable hogs. And the back fall months have yet to really get to a spot that were profitable for producers to get some hedges on. So I wish I had better things to say about the hog. We're moving into BLT season, cold storage report on Tuesday. Maybe we'll get some life from that. I do understand from my days in the commercial grain merchandising world that, everybody talks about, well, they should, are they putting bellies in storage? Are they not? And you start figuring in 7, 8, 9% interest. Maybe that storage hasn't got quite as full as what it normally would in the last 10 years as we worked with cheap interest. So, it possibly will get a spike here, but that hog market, we just have not seen the contraction needed to really rally that thing.
A few days ago, I had the chance to talk with Daryl Peel here on these podcasts. If our viewers want to go back and check out that episode, it was just, like I say, about a week ago or so, and we talked about the long-term ramifications of the cattle rebuilding. He said he hasn't seen any signs of rebuilding yet. He thinks it might be at least 2025 before we make any significant gains on the herd size here in the U.S. So in his mind, he seems to think that the cattle market is going to be on pretty firm ground for a while. Would you agree with that?
Well, absolutely. I mean, that doesn't mean that we don't need to do risk management. We see feeder cattle prices continually set new records every day. Fat cattle prices. It's funny you mentioned that because I met with some people last week that sold the highest priced cattle they ever sold. And I was having lunch with them and they said, well, what would you do? And heat's coming on and the price was higher than they'd ever sold. They said, I think I'd move them before we hit that hot weather heat, outdoor cattle. But by the end of the day, they were significantly $2 to $3 higher than that in the country. And that was already a week ago. So moving forward, they continue to work higher. On Wednesday, I heard significantly bids higher. I haven't seen if that traded yet or not, but just along, they continue to move higher. Ultimately, we wonder about that consumer demand. Credit card debt keeps creeping up. And I am definitely a believer of what Daryl, I just watched that this morning with yourself and Daryl. I look at the age of these ranchers and the dollars that you can generate selling these feeder calves. And I know if you got grass out there, the tendency has been to rebuild the herd, but I just think these guys 60 plus years old in ranch country, I think they ring that register as long as they can. And I don't think that the herd has really rebuilt a whole lot yet. And I just wonder going into fall, how many of those heifers are going to be kept back when you see 5-weight feeder cattle bringing 340, 350. That's a big bill to put out on grass.
Absolutely. Well, Justin, I really enjoyed talking with you again, and I'm glad to catch up. Great information as always, and I hope you have a good weekend out there. We'll catch up with you soon. That is Justin McKinney, and I recommend you get in touch with him if you got some questions about the markets, especially ahead of these big USDA reports. You give him a call and just talk with anybody here at Commstock Investments. They'll be glad to help you out and line up some strategies. That'll do it for this particular episode. And for Brian Hendrickson, our producer, I'm Marlin Bohling. I sure enjoyed having you with us, and we'll catch you next time right here on the Commstock channel. Thanks for joining us on our Commstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.